So we called our outlook 2021 powering forward. Now, I'll be honest, this came out, January or so. We are literally putting the final touches on our mid-year outlook, like as we speak. That comes out in like 2 weeks. But I'm going to talk to you about how we see the world right now. The imagery is what we shared, 6 months ago, and I think it's pretty cool imagery. We said the only way to go is powering forward. We're calling a mid-year outlook, which again comes out on, I think it's July 13th. Picking up speed, right? That's what we're calling the next outlook. Because that's what it is. We powered forward. Now we're picking up speed. I mean, the economy, the stock market, things have really, really come back. We're going to talk about policy for a little bit. So policy is like the government, taxes, spending, the Fed, those things. They pull a lot of levers that can keep things moving. One of the popular questions you probably have in the back of your head, or some of you do, if there's higher taxes, that's got to be bad, right? Like higher taxes, they don't sound good. Well, we took a look historically. You can see on the screen when you have higher capital gains taxes, like are likely coming probably this year or definitely next year. Stock market in 1969 and 1976, as you can see there, 6 months, 12 months later, negative returns. Check out the most recent 2 times, though, late 86, early 2013. 6 months later, 12 months later, pretty darn good returns. Here's the truth. In the mid-70s, 70s in general, the economy was growing okay. You had massive inflation. Things weren't really that great. Versus 87, you had a humming economy. In 2013, economy was okay, but a really accommodative Fed. Guys, we've got an accommodative Fed, and we've got a humming economy. The truth is the economy is strong. It can withstand a lot of things. And our take is, higher taxes are coming. I mean, we know that, right? I mean, how high they are, how much is going to be. Listen, that's Washington making how the sausage is made. But the economy is strong enough that it can withstand those, and likely your investments, specifically in stocks at least, should continue to do really well. And the economy is what matters. The Fed, you've heard of the Fed. We'll keep this real simple. There's Jerome Powell there. He's on 60 Minutes like every month. I've never seen a Fed president that goes on, or a Fed chairperson that goes on TV more than he does. But that's a good thing. He's out there, man. He's saying what the Fed thinks. And that's the Fed balance sheet. You've all heard about the Fed printing money, right? That's the Fed balance sheet. That's what they're talking about. Almost $7 trillion is a Fed balance sheet of mortgage-backed securities and long-term treasuries mainly. And it is what it is. I know a lot of people don't like the Fed for a lot of reasons, but the truth is this: as a steward of assets, when the Fed came out on March 23rd of 2020 and said they were going to backstop everything, that was what LPL research needed to see to give the green light to start to add more equities, significant equities, actually. And the Fed is a tailwind. And you don't have to like them, right? But again, what the Fed is doing, low rates, keeping things going, keeping confidence going, it's historically a tailwind and a beneficial environment for stocks. I'm not saying it's good for the economy. We saw the Fed do something similar last decade, from 2010, the crisis starting with low rates and things like that. Didn't really help the economy all that much. I think there's other things that could help the economy, but from the Fed's point of view, what they're doing, they're trying to help equity prices and risky assets increase in appreciation to bring back confidence. And that's, again, something that's a tailwind in our opinion. Let's see what else we have here. It's not me who can't keep a secret. It's the people I tell who can't. Honest Abe. And I don't think that's a real picture of Honest Abe, but those are some pretty cool glasses. Here's the secret. That the Fed is called monetary policy. Maybe you heard of that. Well, we're talking fiscal policy for a second. Think the CARES Act, right? All the different ways we're trying to help people that have been impacted by this. The amount of stimulus we've seen from the government, $5 trillion with a T, $5 trillion. That's 6 times more than the stimulus we saw during the financial crisis. All right, and there's more coming, right? You every day you turn it on and there's some new drama about the infrastructure plan. There's $1 trillion, $1.5 trillion coming on infrastructure sometime. Eventually here, it's going to come. And again, this is then versus now, right? Then was orange, now is yellow. Well, there's more stimulus in the system as a percent of GDP, that's just as a percent of the economy, now than there was then. Again, a tailwind for economic growth. So that's policy.